What is the best way to use the Hedgeye Asset Allocation models, investing ideas, and RTA together?
Well, they're all pieces of our process. So what I've tried to do is give you pieces of the process without charging you what I'd have to give you the whole process. So again, I mean, what floats your boat is going to be different for different folks. So real-time alerts is what it is. Investing ideas is longer term, and most people wanted a longer term long idea, so we created that. Yeah, we have longer term long ideas, and I hope people respect that that's a different duration that requires real-time alerts to risk manage it. Then if you kind of look at the macro show, it's a daily embrace of uncertainty and how you can risk manage your long-term ideas and short-term trades. I like to go cross duration space. I go cross macro. I don't apologize for it. I think it's the right way to invest as a global macro investor. And as much as how I think about asset allocation, which is the other piece, I think the best way to use that is how I pivot. So there's a couple of points to make on the pivots. It's pivot within each asset class, but it's also pivot in the broader message. So in the broader message, if we have equities, stocks, bonds, currencies, commodities, when I go to zero, on the way to zero, I think the message is becoming clear. We're sell, and then at zero, I think that's a pretty good communication mechanism. I think most people who do asset allocation on the sell side are trying to sell you something, a brokerage fee, some kind of a management fee, whatever the hell they're doing. When I say zero, I'm just saying get the hell out. I mean, I hope you understand that. Net zero, okay? So if you had 100 million on one side, 100 million on the other, I still call that net zero. I wouldn't want any net long exposure to that. So when I go to zero, or when I come off zero, like we just came off zero on commodities, for example. And then we hit the button and real-time alerts with gold. So all these are part of the same process. They're all interconnected, intimately interconnected in my own mind. And that's really the way to use it, is to, if you bought them all, then you totally understand it. If you worked here, you completely understand it. The problem is that for some people, they can't afford all that. Now, that's not totally my problem. I think we've made it very affordable, in fact. We have institutional clients that pay us $500,000 a year to come to understand that. We have them come into our office and we do teach-ins on the whole model. Trust me, this is the truth. This is what Ray Dalio would call the truth. And this is my version of macro with a great team behind me, and I learn a lot from them in terms of how and what we might do to communicate it better. The next, Hedgeye's only 7 or 8 years old. The next 7 or 8 years, we're going to do a lot more communicating from a much better place, because we've gotten to commercialize a lot of these things, I think, a little bit better than we used to. But it's a challenge, I have to admit.
Okay, so let's go through an example. Say you want to have long equity exposure, so your net positioning, say you have 6% exposure to U.S. equities,
right?
Which isn't the case right now, obviously.
It was.
Yeah.
And if we were 6% net long equities, what we would have had on was long utilities, long healthcare, and long housing.
And then you have your sectors within.
And then
equities.
we'd have 6 sectors on the short side.
Yeah.
That's how I'd set it up, because my shorts are smaller than my longs. But again, I'm net long.
Yeah.
I'd have 3 sectors there. And then when I saw all sectors break trade trend lines other than utilities, I went to 2. I'm not saying it, 2 is not, I'm generalizing here. When the market went negative beta, I just took it all off. So right now I'd have 100%, I'd be 100% hedged, 100. I'd be long utilities against short financials. Some of these donkeys on Twitter or whatever at the Business Insider, people that just want to see me fail. They're like, well, where were you in 2011? You're still bearish from there. It was one of the best calls we ever made. We told people to buy utilities and short financials. Utilities were up 15, 18% on the year, and financials were down that much. It was the biggest divergence in the sector variance that you've seen ever. That's a good call. Because that was the period where growth was slung. It's very typical to the shock, and again, it was into the ECB rate hike. Very similar to what we see right now, because the last time that I was long bonds and gold was then, and oh, darn it, we're long them now.